It's a brand new week and time for a brand new episode of Tax Matters, and it is with a very warm heart that we welcome you to this episode. My name is Olumoyiwa Matuloko. On today's episode of the program, we'll continue our series with regional coordinators of the Federal Revenue Service, during which we intend to get them to tell us about what operates in their region. By the way, the Federal Revenue Service is divided into 10 operational regions, and where we are today, Enugu happens to be the headquarters of the Southeast region of the Federal Revenue Service, and we have with us the regional coordinator and the person of Mr. F.O. Obri. Mr. Obri, you are welcome to Tax Matters.
Thank you very much.
Yes, sir. What is your area of coverage?
Well, thank you very much. I cover 10 offices across the 5 states in the region. Enugu State, I cover Anambra State, Ebonyi State, Imo, and Abia State. So by the structure of Federal Inland Revenue Service, my coverage area is the micro and small tax payers, certainly within the region.
Micro and small taxpayers. Yes. What does that mean? Who are those?
Yeah, by the categorization of Federal Inland Revenue Service, it is structured in such a way that taxpayers are segmented, into the large tax bracket, the medium tax bracket, and the micro and small tax bracket. And it's the turnover that is used as a threshold for segregating which one will fall under the large tax office, which one under the MTO, and which one under the micro and small tax office. For the large tax offices, companies or taxpayers that have turnovers of 1 billion naira and above. Then for the medium tax offices, it's companies with turnover of 200 million to 1 billion or less than 1 billion. And then below 200 million, you now fall within my area of jurisdiction. That's the micro and small taxpayers. And of course, there is one other area which I didn't mention, which is the youngest of the segmentation in the service, and that's the government business tax office, which purely deals with government businesses.
These your own taxpayers, 200 million naira and below, we can classify them as small business owners. Even by the nomenclature, you say micro and small tax offices. Okay. How easy is it dealing with them?
There's something in management they call the 80-20 Pareto rule. We are about the smallest contributing into the tax revenue pot of Federal Inland Revenue. But I will tell you obviously that the bulk of the taxpayers in terms of numbers fall within the micro and the small tax payers. So within that bracket, you have a very large number. A large number that operates within the very shadow economy, the informal kind of setting you want to say. Some of them have, obviously, by virtue of their registration, that they are non-limited liability companies. They have, by definition, a formal structure. But looking at it technically, they are informal because their operations are small, and their record-keeping culture is very low, if not totally absent. And so we have issues dealing with them when it comes to tax compliance. It's been a problem, and it's still a problem.
What are you doing to help them, to bring them up to speed as to what they need to do to make it easier for you to collect taxes from them?
We try to educate them through sensitization. We make attempts to penetrate them through their various associations. Sometimes some of them are really not willing to, and that is a very serious problem. Because where there is a knowledge gap and there is a serious desire to have it filled up, you see, the tax is easier to deal with. But if you have a knowledge gap, and the people probably even know that they have a knowledge gap, but they are not prepared to fill up the gap, then we really have a problem. And that is a problem we have, especially within the micro and the small, taxpayers. There is a knowledge gap. There is ignorance. But at the same time, and unfortunately too, the taxpayers are adverse to tax information. Even when you organize sensitization programs for them, you'll be disappointed that not many will turn up. In most cases, if they try to, they simply send their representatives, which is okay, but it gets to a time when they should be involved in the sensitizations, themselves. The idea is not to have their tax consultants relieved of their functions, their responsibilities, in that regard, but at least for them to get integrated, because tax is money. Taxation is money. And if there is any chief executive who cannot discuss taxation and have it integrated into his business, then he may be losing so much unconsciously, and it's unfortunate.
That's well said, sir. Let's pause for a while, see what business owners have to say about the tax system. And then when we come back, you will be filling in the gaps.
My name is Oluyemi Shitu. I'm the lead consultant for Cranial Resources Limited. Cranial Resources is an organization that offers largely consultancy services in financial advisory, business improvement, and training.
In that your own area of endeavor, consultancy, what are the taxes that you are liable to?
My understanding of the obligations really, as a limited liability company, we are obliged not only to be registered for tax purposes, we are obliged to render our VAT payments. VAT is a value-added tax, it's a consumption tax, and so we're obliged to do that, to get registered, to render our VAT on a monthly basis, returns, to render your annual returns to the Federal Inland Revenue Service within 6 months of your year end, whenever your year end is, and then to ensure you pay your taxes as due, as and when due, and then there are several other taxes that come along, capital gains tax, where you actually experience a gain, all of that makes you a corporately responsible citizen.
Do you deal directly with the various tax offices, or, you are an accountant yourself, but if you are not, for example, as a business owner, do you add to whatever you do having to do with the tax offices, or do you make use of consultants?
As a business owner, if I wasn't an accountant, in all sincerity, especially as it concerns tax matters, yes, as a business manager, right, I need to be on top of what I do, but I wouldn't imagine it was my expertise. So I will have a tax consultant or an accountant working side by side with me in relating with the tax office. The reality is that taxation is a core competence on its own. You need those competencies to be able to do well. Otherwise, it's like saying I'm going to court without a lawyer. I probably will hang a noose around my neck. So really, if I wasn't an accountant, then I would definitely have one working with me in relating with tax administrators.
So far, how would you rate the tax offices? Let's look at the FRS, look at the stables of internal revenue. Are you happy?
There's been a lot of improvements over the years, especially in the past 5 years, I would say, both in Lagos State, where you talk about the administration of personal income taxes as it relates to individuals, and then at the federal level, the Federal Inland Revenue Service, there's been a lot of improvements, but there's a lot of room for improvement. Our tax administration system is still very expensive, very, very expensive. There's still the need for a lot more technology inculcation into what we do. There's the need for more education. Then we still have a lot of arrogance, but permit me to say that, on the part of the tax officials, you still have a situation where tax officials believe they're doing you a service to attend to you. We have quite a number who you see a new life, really, especially amongst the leadership. You find some people now you can walk up to who are not going to be derogatory in responding to you. You find people where you talk to them and within split seconds, maximum 1 day, somebody tells you that I'll be back to you and they actually come back to you. You find people now who understand that we are partners in progress, and so you can sit down. The era of arbitrariness is slowly dying, but it's much better than what we had. I'm looking forward to a day when we can use technology much more in the administration of taxes, so that we reduce the amount of interface, human interface that we have.
Let's look at this one. Withholding tax is actually not a tax type. It's an advance payment. What's your experience in that regard? Securing your credit notes or even getting credited at all? And for your clients, I mean, what's your experience in the area of withholding tax?
I'll take it from the basics. There are services and contracts that should have withholding tax. I think the tag withholding tax has a different interpretation in the minds of most taxpayers. They see it as an additional tax, which is not, you know. And because they see it as an additional tax, a lot of people who get their monies withheld really don't see it as an asset, as something that I have a credit note that I should make a demand for. So when my money gets withheld at the point of payment, ordinarily the payer should have compiled all the taxes, deducted, and remitted to the appropriate tax authority. In all sincerity, Mr. Martiluko, a lot of that doesn't happen. People withhold taxes. People either fail to, because they don't know any better, or when they withhold taxes, they just appropriate it. Now, if you have withheld taxes and you have omitted to remit it to the tax office, of course, you won't have a tax credit note. So you have sitting in that chain billions, really, of naira, just sitting and hanging within that loop that people are not benefiting from. You have cases, for instance, where tax credit notes are sitting in tax offices and nobody is coming forward for them. It's a lot of money just lying waste there.
My name is Dele Oworu. I'm the Managing Director and Chief Executive Officer of Associated Insurance Brokers Limited.
What kind of taxes are insurance brokers liable to?
As a corporate organization, we pay corporate tax to the federal government. We pay the usual PAYE of our staff to the Lagos State government because we are based in Lagos. And we also pay VAT on the businesses we broker for our clients, also to the Federal Inland Revenue Service.
What would you want to see in the tax system that will make things better?
From my own experience, because for a certain number of years in the past, I've been resident in the United States of America, and I could compare the tax system with the Nigerian system very easily. What I want done is a bit of do-it-yourself type of tax. You can determine how much tax you have to pay yourself. There's a lot of softwares and forms that as soon as you are completing those forms, you know what your tax liabilities will be. So, in effect, you can know how much you are going to pay from your income, from your various types of income. And then you can compute your tax yourself using a software that is very simple to manipulate. So that's what I would want the Nigerian tax system to adapt. I mean, we know all forms of income everybody generates within the year. So you can put this into your accounting system and the software will calculate whatever you are supposed to pay. And at the end of the year, if you have paid more taxes than expected or more taxes from what you have earned, there is usually a return. They give you some certain amount of money at the end of the year that you have paid more tax than they refund you physical cash, which is the government cuts you a check. It's actually around April of every year. They get you a check for overpaying. And that's usually something everybody looks forward to every year.
So I take it that you are not aware that on the FRS website, there's a tax calculator that you can feed in the relevant figures and you get your taxes calculated for you. Oh, that is there already. It's been on for more than a year. I will recommend that to you. Secondly, there is indeed tax refund in the Nigerian tax system. The problem before was that no money was appropriated for it. But beginning from the fiscal year 2013, the National Assembly set aside a certain amount of money, and refund has indeed been taking place. But we take your suggestions in good faith. A lot is happening. Welcome back, sir. You have listened to your people, those you call your kings, the business owners, the taxpayers. What do you make of all this?
One or two comments I have to make. One is in relation to the withholding tax. Well, it's true that most taxpayers regard the withholding tax as an additional tax, which obviously is not. But most worrisome, which wasn't mentioned, is the fact that most taxpayers regard the withholding tax as a final tax. And it's very, very important that that point is mentioned because certainly it is just an advance payment of tax. It is not as if the tax obligations have been discharged by reason of the deduction of the withholding tax. And that is a very erroneous position that is held by many taxpayers. And looking at this, actually, it's not peculiar to withholding tax. You also have it with VAT, especially import VAT, for instance. When a taxpayer is importing and VAT has been deducted, eventually when the goods come in and they are to be sold, VAT is supposed to be charged, and then the output and input offsets with the resultant payment of the additional VAT. But oftentimes, just like withholding tax, taxpayers believe that with the deductions that have been made at source, they have fully discharged their responsibility in that regard, and that is quite erroneous. And that keeps them away from rendering their returns until when something somewhere somehow brings them to the tax offices for some business relationship before they get to know.
Would this speak to another respondent who is not one of those that you just saw, who is into manufacturing of pharmaceutical products? Now, let's look at a specific issue, value-added tax. You manufacture. How do you fulfill your VAT obligations? Are you aware of the regularity for filing and remittance of VAT, sir?
Of course. Incidentally, I've told you that I'm a pharmaceutical manufacturer. In pharmaceutical businesses, we don't pay VAT. We don't pay value-added tax. However, I'm glad you're raising this issue because we are forced to pay VAT while bringing in our raw materials for the manufacturing of the pharmaceutical products to the customs at the port, which is wrong. And we've made this presentation several times to the government agencies. If the pharmaceutical manufacturers are not collecting tax for products manufactured, why do you expect them to pay tax for the raw materials they use for producing these products?
Now, that kind of business owner does not have the opportunity for input and output. What does he do?
Yeah, it's very simple. It's very simple. Well, the materials that are imported, and I want that to be really put in context. the materials that are imported could have dual usage. It may be used for pharmaceutical, it may be used for other food products that are not exempted, from VAT. So when at the point of entry, VAT is correctly collected. But coming back again, the pharmaceutical product is exempted. By virtue of that exemption status, all the input VAT that were suffered will be allowed to be expensed into the profit and loss account in their financial statement.
So that's the way out.
Yes, that's to take control of that, because there is no output of from where that input is to be offset. So they are written off to profit and loss account.
We are coasting home, and this interview with Mr. Aubrey, the regional coordinator, Southeast Region of the FRS, will continue next episode. We'll also be bringing you more of the interviews that we had with business owners in Enugu. In the meantime, let us fill you in with what is happening at the CITN. Christina has the story.
As part of its contribution towards moving the Nigerian economy forward, the CITN has instituted a series of quarterly press briefings on fiscal policies relating to taxation and revenue issues. The very first in the series took place on Thursday, 5th of March 2015 at the brand new secretariat of the Institute, the Tax Professionals House, located in Central Business District, Alausa in Ikeja, Lagos.
The major reason for this event is essentially to present the Institute's positions on some critical national issues relating to taxation and the national economy. Talking about the budget and crude oil impact, we join in the calls for the benchmark to be scaled down to not more than $55 due to the economic realities of the global crude oil market, even if government is reasonably certain of better prices during the fiscal year. It should focus on using any excess arising therefrom to boost the critical revenue buffer needed to hedge the economy from revenue volatilities. Focus should also be placed on cutting down on over-bloated recurrent expenditure that are not added much value to government's fiscal transparency drive.
On the imminent elections,
we also use this medium to call on all the contesting parties to split tax policy content of their manifesto, if they have one. So far, we have not seen any from by all the parties. All that we have been seeing are more peripheral grandstanding. Now, looking at narrow revenue flows from luxury tax introduction, this tax will contribute only 0.38% to Federal Revenue Service collection for this year. Another issue of concern is the question as to whether this is indeed a tax or levy, as necessary legal instrument to back it up has not been submitted to the National Assembly for passage. Indeed, people have been calling, why must we continue to have only, the VAT rate at 5%? Why don't you have another rate? Even though it's not only one rate, you have a zero rate, then we have 5%. But there should be a third rate that will cater for luxury items.
a question and answer session followed the president's address.
If you ask me, I think the CITN needs to be commended. Prior to that press conference, the Senate had put forward $52 per barrel as the benchmark. The House of Reps, $55, just like the CITN suggested. And that very week of the press conference, the two chambers harmonized their positions, and now we have $53 as the benchmark for the budget.
A case of great minds working alike.
I think so. I think so.
Other issues touched upon include the expenditure profile of the government, tax waivers and concessions, pump price of PMS, and the state of the country's refineries, as well as the forthcoming elections. On the same day, still at the same location, the brand new Tax Professional House, or the first, took place. At a go, 3 books were launched: Indirect Taxes in Nigeria, Nigerian Tax Treaty Manual, and 2 volumes of the CITN Nigerian Tax Guide and Statutes, and the inauguration of the Nigerian Academy of Taxation. Chief JFS Jegede, past president of the CITN, is the chairman Tax Academy Implementation Committee.
The idea behind the Nigerian Academy of Taxation was conceived as one of the projects contained in a document titled Roadmap Towards CITN Greatness, presented to and approved by Council on June 2nd, 2011, which contained, among others, the establishment of a tax academy for the Institute to train students for diploma, taxation technician scheme, and professional examinations of the Institute.
The Nigerian Academy of Taxation will offer certificate, diploma, advanced diploma, and postgraduate courses in several areas. The books were launched and bought by representatives of tax firms, federal and state revenue boards, and individuals present.
I think it was Mrs. Shitu, one of our respondents, who said earlier in the program that taxation is a core competence on its own. Rightly said. And we dare say that the CITN is living up to its billings. Right on CITN. And to our viewers, we want to thank you most sincerely for spending time with us on today's episode of the program. Let's see you next. From Christina.
Thank you for watching. Bye for now. Don't forget to vote.